Hey everybody, Smart Silver Stacker here. There is a movement among certain US states to remonetize gold and silver, and this could have some major impacts on the bullion market and have some major implications for us as stackers of physical metal. So we're going to talk about the state's motivation for making gold and silver money again, and also some of the possible fallout from this move. Now, today's video is brought to us by sdbullion.com, home of the lowest prices on gold and silver bullion, period. If you're a new stacker, you can now get your first purchase at spot if you check out sdbullion.com/new. Now, if you checked out yesterday's video, you heard me talk about House Bill 180 in Idaho, and that's a law that would allow the Idaho state treasurer to store a portion of the state's idle money in physical gold and silver. And very specifically, that law would prohibit the state from getting into paper gold or silver, that is futures contracts, ETFs, that sort of thing. They would have to have the real metal. And that is a very important distinction to some of these laws. Now, in the comments of that video, some of you pointed out to me that Idaho is not alone in this move, and there are a number of other states that are moving towards hard money as well. And that is correct. There are a number of states looking at laws right now that would make gold and silver money, and some have already done it, actually. In fact, Utah passed some legal tender and gold and silver specie laws back in 2011. Wyoming and Oklahoma have also jumped on that bandwagon, and now Idaho has this law in the books. Missouri actually just passed a law which recognizes gold and silver as hard money, and it too would require a portion of Missouri's idle funds to be stored in gold and silver. In fact, I think in that specific law, it is not less than 1% of the state's investable money would have to be put into physical bullion. And I think that this is a very wise and a decision with a lot of foresight that these states are moving towards precious metals, and I believe that we will see more of that in the future. Now, Mississippi is another state that's getting on board. They just passed a law to remove sales tax on the precious metals. So this is definitely a trend that is gaining some momentum as we move forward and as inflation becomes a much bigger problem. And that really, I believe, is the motivating factor that is driving these states towards hard money. Now, what do these laws all mean? Well, basically, when these states pass these legal tender laws, it allows the settlement of debts and that sort of thing to be done in precious metals. It allows people to pay for things in precious metals, and notably, it removes the state capital gains tax on precious metals investments, and also it removes the sales tax on bullion products. So those are all moves in the right direction. I mean, really, that part of the law isn't going to make a huge difference, in my opinion, until at the federal level, the capital gains tax is removed, which, of course, we probably won't see that anytime soon. And it's interesting that on this particular issue, state governments and the federal government are really at odds here. And one of the big reasons there is, like I said, inflation is what is driving states towards precious metals as money, because they're beginning to realize the inherent flaws of the fiat currency system that we have, namely that the fiat dollars, are being devalued at a rapid pace. And the thing about state governments, they don't have the ability like the feds do to just run off more money to cover the debts. They can't borrow endlessly the way that the federal government can, because they don't have the Federal Reserve, that is, backstopping it. If the states go into too much debt, they're just going to have to go bankrupt. They can't print up a bunch of currency and have the Federal Reserve monetize the debt and destroy the currency in order to pay back those debts in devalued fiat currency. And so that's why we're seeing the states do this. Now, the federal government, obviously, they're not going to move towards gold and silver as currency anytime in the near future, because the thing about gold and silver, when they are the money, it kind of hamstrings the government and what they can do. It forces them to rein in spending, because this stuff, gold and silver, it can't be printed. And all of the spending and printing that is going on in Washington is really beginning to show in the inflation numbers. Just this past week, we had the PCE, that's the Personal Consumption Expenditures Index, come out. That is the Fed's preferred measure of inflation, actually, and it was up 0.6% month over month, and that represents an acceleration in the inflation trend. The inflation trend is starting to pick back up. We're seeing the CPI start to tick back up, and the price of everything continues to rise. And the reason for that is that the federal government, they continue this tremendously inflationary fiscal policy. They're spending a lot of money, they're borrowing a lot of money from the future, spending it into the now. We're also seeing the disruption of global supply chains and de-dollarization as we head closer to a global World War III conflict. And also, the Fed, they're fighting inflation, supposedly. That's what they tell us. But they haven't been nearly aggressive enough with their program of rate hikes and with their program of quantitative tightening to counteract those other factors, and also to undo the decade plus of majorly inflationary, extremely easy monetary policy. You can't keep interest rates near zero for close to a decade and then expect a quarter basis point rate hikes every couple months to get inflation under control. It's just not going to happen. And interestingly enough, on this PCE index number that came out, this higher inflation number, this accelerating inflation number, we actually saw a sell-off in asset classes pretty much across the board. Stocks sold off, precious metals sold off. And I've had some people comment on the channel asking, what's going on? I had some people tell me that they're new stackers and they don't understand. They thought that if inflation is moving higher, then we should be seeing higher prices in precious metals, right? And you would expect other assets like stocks to continue moving up as well. But really where we're seeing the price increases is in consumer goods, whereas these other assets are kind of selling off. And it is a weird dynamic. I mean, you're not wrong. If you're a new stacker and you're watching this market action, you might be left scratching your head. But if you understand how we got to where we are, it starts to make a little bit more sense. Now, the reason I say that is because the reason that asset prices, that is stocks, real estate, all of these assets that we have seen blow up in value over the past decade, cryptocurrency, I mean, there's hardly a better example than that. Seeing Bitcoin get up to $65,000 back in 2021. It's wild stuff. And the reason that we saw all of these assets grow to the astronomical levels that we have, it's not because there was ever any kind of economic recovery, a real economic recovery following the 2008 financial crisis or following the 2020 pandemic-induced financial crisis. What we've really seen is just the Fed print up vast quantities of money, expand their balance sheet enormously, keep interest rates artificially low for many, many years, and that has triggered asset price inflation. It's expanded the money supply. All of this money had to go somewhere, and it flowed into assets. Really what they were doing was inflating gigantic asset bubbles. And so when you understand that dynamic, it begins to make it a little more clear why asset prices are selling off now that we're seeing inflation tick up. And that reason is that now investors view these higher inflation numbers as a sign that the Federal Reserve is going to get tighter with their policy. The punch bowl is going to be taken away. And so we see asset prices dropping. And I mean, I can't think of a better indicator of how these markets have become driven exclusively by the Fed than this market action that we are seeing. It's a huge sign that there's no real price discovery in these markets. I mean, everything is simply determined not just by what the Fed does, but just by the anticipation of what the Fed is going to do next. That's why you see an inflation number come out. The Fed doesn't have to say anything, and all of a sudden things start selling off because it's just the anticipation of what the Fed does next. That's the only thing that's really driving prices. Now, like I said, we did see a bit of a sell-off in the price of precious metals on this news as well, but I doubt very much that any of that selling was occurring in the physical market. I mean, I don't know about you. I didn't go out and sell any gold or silver when I saw that inflation was getting higher. But where we are seeing selling is in the paper futures markets. And there's a lot of reasons for this. One of the reasons is that people holding paper futures contracts is probably a bit more speculative than folks like us who are holding physical metal. And also, when stocks begin to drop, we have a lot of leverage in the stock market out there. Investors might be getting margin calls. They need to sell anything they have to make up that capital. So they start selling off precious metals, paper precious metals, as a result. And that's why I view this drop in the price of gold and silver really as nothing more than a buying opportunity for physical, because you got to understand, in these paper markets, like at the COMEX, for example, there is a lot more paper silver and gold that gets traded than actual underlying physical metal. If you look at the official numbers from the COMEX, the open interest, each one of these contracts represents 5,000 ounces of silver. That open interest is representative of significantly more metal, even than, according to their official numbers, they have in their warehouses. And if you dive a little bit deeper into it, if you even look at the CME's papers, their own documents, they acknowledge that probably only about 50% of their eligible silver is actually available. So it's really, many times the amount of paper contracts exist than actual physical metal that is sitting in these precious metals warehouses. And so, when the music stops, the folks with physical metal, they're going to be the ones with a real seat at the table. And there's going to be a lot of people who are holding paper gold and silver. And what's going to happen to them if there's no metal to back it up? Well, those contracts are just going to get settled in fiat currency. They're going to change the rules. And I think that the day when that happens is getting closer and closer. These states passing laws making gold and silver into money, once again, remonetizing gold and silver, and especially the laws like in Missouri, which are now requiring the state treasury to open positions in physical metal. That Idaho House Bill 180 specifically states that they cannot invest that money into paper gold and silver derivatives. It's got to be in real physical metal that the state takes custody of. This could even lead to, the silver squeeze, basically the short squeeze in the physical metals that we've been talking about for 2 years. And it's not like Idaho and Missouri alone are going to trigger that kind of a move, but the fact that they're passing these laws and they're making these moves to acquire physical metals, it's a sign that more and more economic actors are going to be taking these steps as inflation continues to worsen. Because trust me, inflation is going to continue to move higher unless the Federal Reserve gets extremely aggressive, which there's no chance that they're going to do that. Inflation is going to tick up. Whether they do a 50 basis point hike or a 25 basis point hike, it's really not important, because the important thing here is they're never going to get as aggressive as they need to. They're never going to pull a Paul Volcker and hike the federal funds rate up to 19% or 20% in a very short period of time, because there's so much leverage in this economy. Back in 1979, when Paul Volcker did that, the U.S. national debt was something like $1 trillion. Now it's $31.5 trillion. Plus, we've got all these unfunded liabilities. We've got record amounts of consumer debt and corporate debt and student debt. All this stuff is at astronomical levels. And when you have this much debt and this much leverage, you just cannot go on an interest rate hiking spree like that without completely eviscerating and destroying the economy. I mean, unfortunately, because of where we're at, that's what the economy needs, to have a real free market solution. We need all of this bad debt to be wiped out of the system and to be defaulted on. But there's no way that any politicians want to be at the helm when that occurs, and there's no way that any Federal Reserve chairman wants to be at the helm when that occurs. So it's not going to happen. And as this inflation problem continues to run out of control, we are going to see more investors. That's going to be both individuals and institutions, and it's going to be both in the private and the public sector. We're going to see mom and pop retail investors, us stackers, we're going to be moving into physical metals in a bigger way. I am sure of that our numbers are going to grow when this inflation problem really becomes clear, how bad it's going to get. And also, we're going to see public institutions like the state of Idaho and the state of Missouri, their treasuries are going to be trying to move into this market. And I wouldn't be surprised as this problem really gets out of control, and especially for silver, I would not be surprised if we see private companies trying to acquire physical metal. I'm talking about companies like Tesla, for example, or like Samsung, or like Apple, companies that rely on physical silver to make their products, because you got to keep in mind, silver is a monetary metal, and we're seeing it be remonetized by these states, but it is also an industrial metal, and an extremely important one in today's high-tech economy. So these companies may look to get their own stockpiles of silver, not because they're trying to hedge against inflation. Well, they will be trying to hedge against inflation, but in a different way than states and stackers. they're going to be trying to control their input cost. If you see the price of silver start to tick way up, they may decide, hey, we need to buy now before it gets too much more expensive because we need this stuff to manufacture our products. Now, one thing that people say on that note is, silver could never go so high because Samsung phone would become impossible or too expensive to manufacture, an iPhone or a Tesla car. Well, look, these products are going to continue to get manufactured. I mean, unless we see, $10,000, $20,000 silver, the amount of silver that goes into an individual product is relatively small. But when you scale it to, the millions of smartphones that are getting built, or the millions of electric vehicles that supposedly we're going to be building in the near future, individually it doesn't cost much, but you need a lot of it to manufacture them. So even at a relatively high price, silver would still represent a tiny portion of the input cost, say for an iPhone, but it's still an essential one. And so the point is here that I think we're going to see more and more institutions, both public, private, individual investors, they're all going to be trying to move into a very, very tiny market. I mean, the gold market is small enough, but silver, physical silver, is a very, very tiny market because silver isn't getting stockpiled the way gold is. Gold, most of the gold that was ever mined still exists in some form, whether it be in a vault at a central bank, or whether it be in the form of chalices in the Vatican, or coins in an investor's stockpile. Pretty much all of it is still out there, but a lot of the silver that has been mined has been relegated to the junkyard. It's in landfills in essentially an unretrievable form, or at least an unretrievable form at today's prices. If we start seeing much, much higher silver prices, who knows? Maybe people will start mining old junkyards and trying to dig up all those old smartphones and extract the silver. But at today's prices, it's not economical by any means. So, silver is a very small market. And as we see more and more folks trying to get into the actual physical space, we could very well see the silver squeeze. And it would be a lot like what happened last year in nickel. It's not unheard of to have commodities get squeezed in today's environment. Last year, following Russia's invasion of Ukraine, the nickel market went crazy, so much so that the LME had to halt trading for a significant period of time. There was a Chinese billionaire nickel magnate, this guy Zhang Guangda, I think is his name, and he had this huge short position, and he stood to lose a huge fortune. But luckily, his cronies at the LME, they froze trading. And basically what they did was they screwed all the people with long positions in nickel. I mean, nickel went up to $100,000 a ton or something like that. They froze markets, they halted them. I think when they reopened them back up, it opened up at like $37,000 a ton or somewhere around there. So the point is that those folks with those longs contracts, they could have made a killing at the expense of the shorts, but the LME stepped in and halted the market. But there's a big difference between the nickel market and the gold and silver market, and that is, how many investors who were invested in nickel actually had taken physical delivery. Now, I've got some nickel in the form of U.S. nickels, although honestly those are more copper than anything. But most investors, very few people actually are taking physical delivery of their nickel, whereas stackers, it's pretty easy to take delivery of your gold and silver because it's not like a giant pallet weighing tons of metal. It's some coins and some bars. And in the case of gold, it's a very small amount of metal to represent significant value, and silver is not much different. We're going to see institutions like Idaho and their treasury, and like Missouri, and like individual stackers, and very likely these other institutions. Who knows? We may even see hedge funds moving into the space. Eventually, I think it is going to become the in investment. Right now, silver and gold are still very unloved, even though we're seeing laws like this passed by the states, even though we are seeing more and more people join the stacking movement. These are still very unloved investments by the standards of what would be considered, a bubble or a mania. We're nowhere near that level in gold and silver, but very high levels of inflation, or potentially even hyperinflation, are exactly the sort of things that could trigger a mania for precious metals and a huge move into the very, very tiny physical space. And you just think about all those folks who are holding paper gold and silver. If they start trying to clamor for delivery, even just the folks who already own paper derivatives of gold and silver, forget new investors. If all the paper longs start trying to take delivery, that alone could trigger a squeeze. So, conditions are ripe for that when you look at how much of these paper derivatives of gold and silver trade relative to the underlying physical. And then you look at the overall situation with inflation and folks starting to wake up. We've got central banks, they stacked more gold in 2022 than any year on record. So, I mean, some people have already gotten the memo on inflation, and it's only a matter of time until the public at large, the broader public, gets the same idea. And when that happens, I mean, the price of physical gold and silver could explode. Now, will the purchasing power of the gold and silver increase? I don't know. I mean, it might be that you see $1,000 silver, but a loaf of bread costs $2,000. I mean, I have no idea how this will play out. Economic catastrophes are, I think, hard to forecast how exactly the pieces are going to land. But I do know you want to get your gold and silver, your physical metal, before this mania kicks off. And I think it's only a matter of time. Now, I mean, timing something like this, who knows? I mean, it could be 10 years before this occurs, or it could be next month. I really don't know, because there are so many things at play today, and things have gotten so chaotic. It seems like every day you wake up, you hear, some country has dropped the dollar, or the war is escalating in Ukraine, or more people are joining BRICS, more entities, more nations, that is, joining BRICS, or, new sanctions have been levied. So there's a lot of moving parts here. But I think that the writing on the wall for the dollar is clear, and I think it's obvious that we are headed towards a much worse inflation problem. And that's why I am still stacking gold and silver. And I think that it is becoming more urgent to do so. So these pullbacks that we see, I think that there's something to take advantage of. It's time to get into physical gold and silver. None of this is financial advice, of course. I'm not a financial advisor. Don't just watch this video and go out and buy a bunch of gold and silver. Do your own due diligence. And, maybe they're not for everybody. There's other things that we need to be doing too to get prepared right now. I would suggest you have your essentials, your food, things like that, water, other things that may become difficult to obtain in a significantly inflationary or potentially even hyperinflationary environment. Even though inflation, can wipe out debts, I do think that getting out of high interest rate consumer debt right now is a wise decision, just to make yourself a stronger hand with your physical metals position, and that should be a priority before, seriously stacking. But that being said, these things are on sale at today's prices, and I do think that we are headed towards a time when people really want to move into this space in a big way, and you want to get your hands on some before that happens. So let me know what you think in the comments down below, everybody. Thank you very much for watching. I will catch you next time. Smart Silver Stacker, out.